Thank you very much.
Thank you very much. Thank you. I always love it when people have a look at the slides beforehand and they're like, I have no idea what he's going to say. That sets an interesting agenda. Okay, so what I'm going to do is talk to you a little bit about 1% Finished. It's kind of a bit of a mantra of our company. And what I'm going to do is sort of talk you through really where we've come from and why we've got this perspective on the industry. There's a kind of a few health warnings before we sort of get going on this, because generally I speak really, really quickly. So at any point, if I'm speaking too quickly, like put your hand up. Like right hand, I'm speaking too quickly. Like left hand, you want a question answered type vibe. So don't wait till the end to kind of ask any questions. I like it much more interactive. The last one is, if you don't make it interactive, then I definitely will. Like there's like a splash zone kind of in the first 3 rows that if either you're not making eye contact or not like asking questions, I'm going to come in the crowd. Like they haven't given me a thing where I can't, like, this is possible, I can come to you, okay? So, so in the grand scheme of things, we're just going to keep it flow, keep interactive. If you've got any questions, ask them as we're going through. But my background's reasonably unique. I've worked in pretty much most of the areas of financial services. So I kind of started off in a big global usability agency, ran the digital transformation program for a big insurance company, did the same thing for a big UK bank. I ran the digital banking practice for a big Indian offshoring company, started up a startup, which I sold off, which is yay, so no more mortgage payments, woohoo. And then most recently ran the digital banking practice globally for a big management consultancy and research firm. You can go and look at who those brands are on LinkedIn. I just don't want to sort of name them right now, just in case some of the stuff I say later on might be a bit controversial, just to set the tone of where this goes. And what we did off the back of that is start a little company called 11FS. And if you don't know us, we do, we've got a global benchmarking tool. We do consultancy. We're building banks globally for people right now. We've just got off the back of doing one for NatWest. We're doing it in the US. We're doing it in Africa. We're doing it in Asia. Announcement actually yesterday with Standard Chartered that we got a virtual banking license out in Hong Kong, which is kind of cool. So doing interesting things in interesting places. We've got a media side of things, and actually we've got a technology arm called Foundry, which we're building out a brand new core banking full stack architecture. We've done all of this in the last 3 years, and we've done it all with one mantra, which is that digital banking fundamentally is only 1% finished. Now, when you kind of say that, you get kind of an interesting react. Like I heard some slight intake of breath in some areas, which was fun. And the reaction that you get is usually reasonably sort of polarized, and this is definitely no aspersions about anybody's types of shoes. They're lovely. The flare with the red, I'm loving the socks, they're fantastic. But being in a situation where you get a polarized reaction to, on one side of the fence, people who believe that actually digital is fundamentally just another distribution channel. Actually, we've seen distribution, we had human distribution and telephony distribution, and digital just like sells the widgets that we've got just through a different channel. And on the other hand, what you have is a kind of a group of people who believe that actually, with all of the fundamental reform that we've seen from a regulatory perspective, with all of the new opportunities that new technology brings with it, with all of the expectations being set by other industries or even sort of competitors that are coming through in this space, that there's actually much more that we can do. So over the course of the presentation, what I'm going to try and do is, A, figure out where you guys are, and explain where we are in terms of what our thinking is. But to try and like force you guys to kind of get involved, there's a little bit of like observational piece to start with. So like you'll probably recognize many of this. This is where banking sort of is today. You'll probably recognize this because you bank probably with some of these people. And if we sort of roll back a little bit to 1990, it was subtle for you guys. So like, so if you go like today and roll back, and today and back. So major differences. Anybody want to like hasten what do you reckon the major differences between the interfaces that we're seeing in 1990 to 2019?
I was on the phone now. It looks as I was on the phone.
Well, there's some definitely on the phone for sure. I know. Do you know what? Somebody always mentions that there's always one fan. Like it's like that's a good answer. It's not the right one, So I always feel slightly family fortunes at this point type thing. Like it's a good answer, but it's not mine. That type of vibe. But any other guesses?
HTTP.
Well, sure, definitely. There was a massive progress over that period in terms of where we're at to where we're at now as well. Yeah, so security. Definitely that's a good one. Again, it's a good one, but it's not my answer. Any other guesses? Somebody had their hand up towards the back? Best time to be rolling? Yeah, like web fonts became a thing, didn't they, at some point? Any other guesses? No transactions. Do you know what? I think even in 1990, there was some transactional capability. Definitely it was a lot of just here's a thing, here's a balance, here's a whatever.
Fundamentally, nothing has changed.
Oh, love you. Love you. Nothing. Absolutely nothing. You're the first person. Like, I need to, yeah. I mean, like, I've been preparing like a T-shirt gun for like 20 years on this thing. Like, if I'd have had it right now, you'd have been, but nothing. And it's cruel, and I understand it. But it's not really nothing. Actually, there is a major thing that actually changed between these two things. And it's like a whole lot of money. Like, fundamentally, like, a crazy amount of money was actually invested between those 2 points, making these happen. Now, definitely in terms of the dial, maybe the dial was nothing. But if you were measuring the dial just purely from an investment perspective, about £250 billion was spent on those organizations, moving them from that point to that point, digitally transforming those organizations in terms of what we were doing. Now, there's many sort of headlines that you see out there in this, and I'm not picking on anybody particularly in terms of doing it, because actually it's easy not to pick on anybody particularly because everybody's doing it. And it's hard because I'm like, well, so 3 billion or 17 billion or 1 billion or whatever, where is that money going really, And there's many different excuses if you look at it. So there's, the people kind of talk about trust or competitors or, our legacy IT systems are like prohibiting us doing these amazing experiences that we want to for people. And there's a plethora of sort of tech word buzz stuff about, distributed ledger technology and, we've invested 100 million in this stuff or innovation or whatever it needs to be. But from my perspective, those are reasonably all excuses. And there's one person's problem who it's not, and it's the customer. Because those experiences that have actually been delivered to customers haven't materially changed dramatically enough, given the amount of investment. And I want you to kind of keep that big stack of money kind of in your mind, because equally I'm like, well, 250 billion is a lot of money, right? We could do amazing things. We could have like the hella party you'd ever want to do that. Like, it would be just an amazing event. But being in that situation, I'm going to try and unpack and try and explore why that is and where we've come from and what's led us to this stage. So if you kind of look at like the good old days of banking, banks had a really good relationship with their customers. The branch experience, people kind of shook your hand and knew how you had your tea and were very sort of knew your kids' ages, knew your husband or your wife's name, all of that good stuff. And actually what's happened over this period of time is the strain on the relationship through prior to the financial crisis, but actually through various different elements of things that have put strain on that relationship, have essentially just stretched out. And now what we've seen is that gap between the services that are actually being provided by financial organizations and the things that the customers actually need to do is getting bigger and bigger and bigger. Now, fintech fundamentally is just plugging that gap. And really, when I say fintech, I mean like crazy tiny little startups doing nothing to Apple, as you kind of referred to earlier on. All these things are doing, like this is fundamentally, this whole thing in the middle here just exists because these big organizations have left opportunity on the table. So if banks were in a situation where this gap hadn't opened up, well then Apple credit card wouldn't need to be a thing, or Monzo would not need to be an organization. The opportunity has led to the thing that's there. Now fundamentally, predication on universal banking, it sort of starts to break people's business models, either in terms of actually how upsell and cross-sell works, or fundamentally even just how the manufacturing of the products start to take shape when you're not seeing your customers in the way that you would do before. So the idea of this sort of genericizing of financial services, the generic experience that's coming through from a digital banking perspective, it's that one-size-fits-nobody approach to experiences. Gone is the sort of human element of banking that actually sort of brought these things through. Now, we sort of blame one specific thing for this. And you're on a fire, dude, so like I'm going to come to you first. So like, I blame one thing for it. If you get two things, like there's another one in a minute. If you get the hat trick in this, I'm going to give you something big. But what do you reckon? What do you reckon is the major driver for this big change?
Probably the internet.
The internet. Oh, dude, like. You threw that one, didn't you? You don't want to take it all. Anybody else? What do you think? The major thing that actually was the driving force of all of this money being spent and is actually not moving forwards in the way that we need to? Somebody whispered that. They were like, oh, okay.
Banks assumed they knew what the customers wanted without actually any insight into what the customers wanted.
I think that's a really good one. Definitely, there's always a plethora of I understand customers, and actually I will come to that, but it's not the answer that I have on this one. What do you think? No. Anybody else?
Is it the gap between the bankers and the technologists within the bank, and the bankers imagining the customer is always going to be exactly the same as he's always been, and having no interest in technology whatsoever other than doing digital things with technology?
I mean, there's definitely that. Yeah, for sure. There's been a weird sort of political divide between the technologists and the business people for a long time in those organizations. But the reason I put, and the reason that I sort of believe it, and the reason that I think it's really interesting, because actually it's the thing that I think the industry has been sort of sold on for probably about 15 years as the fix, is digitization. And digitization for me is an interesting concept because it's fundamentally one of those things like, anybody who exists on the internet right now, you walk around the internet, you see an advert for like those 60-second abs things. You know, the idea that it's like that fad diet where just take these 2 tablets, drink this meal, you'll lose 3 stone. Like digitization is this. It's the idea that actually this stuff is not hard. And it's the idea that you just take the thing that you have and magically move it to another place, and it's digital. And the reality of the situation is it's not like that. What we've done over the industry is gone, well, we had this full, rich human experience with all of the different functionality through branch capability. We sort of digitized it and moved it down into internet banking, sort of replicating some of the pieces. And then we digitized it further into mobile banking. So we went from a paper statement and then into a statement that looked like the paper for some reason. Not sure why. If anybody, if you're really good, dude, you can tell me this one, but no. It's just like, why? And then it's even smaller. Like, we just, 250 billion pounds, we've just made stuff smaller, essentially, right? What was the purpose behind that? Because actually, if all we're doing is digitizing paper and moving the same capability, removing some functionality, removing that sort of human experience from the branch capability, and then fundamentally, you end up with a mobile interface that has sort of 30 or 40% of the capability that actually you can do through those physical channels. That doesn't make sense to me, really. Does that make sense to you guys?
Think about the fact that there's no business change through any of that.
Yes.
Digitalisation is a business transformation mechanism, not a technical thing.
Exactly. And that's the perverse thing, isn't it? The start of these transformations have been done for the wrong reason. They've been to take paper out of a process, not fundamentally change where those business models are going. Like, I've got a new favorite, dude. Like, I'm sorry, but so moving forwards, like, actually, the fundamental that we're seeing here is actually the shift from an analog to digitized and onto digital world. And the things that mean is when you start sort of breaking it down, the example that we had there is like in a paper context, and other industries have sort of gone through this. You see the analog papers being great and everybody sort of loved that at the time. We sort of digitized paper into like PDFs, like on iPads, We all got really excited about that to start with, didn't we? And there was this sort of little page curl kind of an animation and everything. But fundamentally, we just took paper and put it on a digital device. And now what we've got is digital news. If I want to know a thing about a current event, I go to Twitter. Like, I don't go to the Times or go buy a paper. I go to the source of that thing in terms of where it's actually happening. Similarly, we've seen this in the music industry. We had CDs, and that was great. Nice physical CD. That was literally the first CD that I ever bought, by the way. And actually moved into a digitized world where we were still, for some reason, selling albums like on a digital medium. So you still had to buy your 12 songs, you know, you got them bundled up. There was like 3 you wanted, the rest were trash, you know, but what are you going to do? And now we're in a situation where Spotify has redefined how actually streaming music and that it actually works, right? You know, yes, they're having some interesting sort of problems right now with rights management, aren't they? But, you know, this is a different medium with a different business model managed in a very different way. So for banking, you know, we've seen that physical side of things, and that was great. You know, we've seen sort of digitized banking, but really, where are we going? You know, what is that digital banking model? How does that work? So for me, there's a few things that sort of come from this. You know, we're in a situation where the risk of taking these big bets is moving. It's almost impossible now just to start, and you know, I'm sure all of you places have witnessed this type of transformation. It's like the big transformation, the 2-year program. We're going to spend $1 billion, we're going to put all the things, we put all of our chips in the same place and we sort of go, this is going to be the savior, this is the thing that'll move us forwards. This platform, this consolidation, this setup in terms of where we're going. And actually the difficult thing is that with the pace of change outside of your organizations moving so quickly, the betting on the things that are actually going to be the right, you know, black 26 to kind of put this stuff on is sort of dissipating. So I think the world of big bets is really, really going away. I think the second one on that really is that the transformation that we've actually seen within digital shifts dramatically the resources that are actually required to do this. Now, fundamentally, digital now is a small team sport. You know, this isn't about having thousands of people aligned to something. You know, anybody who started a digital transformation program kind of recognizes the fact that it kind of looks a little bit like this. You know, it's essentially, I mean, like this is like IT, and then like business change, and you've got your like directors and sponsors who just like come and look at from the sides to kind of get excited about what you're doing. And you know, the difficulty in this is like digital doesn't work like this. You know, digital now, like say, fundamentally requires you to do this type of thing. You know, digital being that small team sport, you don't need the 400 people who you can get. You need the 4 who are awesome at doing the thing. And actually not just that they're good at doing the thing, but they specifically know the roles that they need to play. I think there's an element there not only about the team, but actually the ways in which working happens. And this is the, you know, the fundamental difference that we're actually seeing. And this is the most beautiful thing that we're actually seeing in fintech right now is, you know, 15 people who are truly skilled, truly motivated can achieve more than 5,000 people in an organization that won't allow them. And that's amazing. Because the optionality of actually doing nothing at that stage is very, very difficult to get away from. And this is kind of what we've done. You know, the bank that we built with NatWest, that is the entirety of the people that were actually in that organization. And it started with 3 people. From risk to compliance to engineering to integration to vendor selection to customer service. That's the entirety of that it takes to do it. So the move away from that need to have lots of people, like I know it makes everybody feel nice and important when your team's really big, like I'm not gonna lie, but you know, being in a situation where actually you don't need them kind of changes the game, right? Going back to that billion, it's really hard to spend £1 billion if you've only got 50 people in the room, right? I mean, we could give it a really good go, but it's, you know, it's really hard. So I think next for me, and this is kind of a major one, is that really like ideas are sort of cheap. I imagine there's nobody in this room now who, if I went, look, magic wand, what would you like to do tomorrow? What would you like to do tomorrow to make your organization better? Like if there's anybody here right now who doesn't at least have 3 things, then you're like, you know, this is the banking thing. You're in the wrong room probably, you know, but so for me, similarly, when I go into any organization right now, like I don't find anybody who's just dumb. Like I don't go into a bank, big bank, Canary Wharf and go, nope, they just don't get it. They totally do. Everybody understands what needs to happen. Execution in big organizations is the hard thing. How do you actually mobilize the people in a way that actually can allow you to do things rather than actually your organization protecting you from change? And that's probably one of the most fundamental things to do. How do you create that permission within your organization to actually move forwards? This isn't about fail fast, because I don't really like fail fast. This is about how do you succeed quickly and cheaply. And that's the challenge that you've got to instill in your organization to make these things happen. The next one for me is that the future is really about services. You know, this isn't a product world anymore. Specifically, it's about intelligent services in terms of where we're going. And actually, when we sort of start talking about intelligent services, we sort of break it down by digital riches. So for me, if you're in an organization and actually you're going, well, I'm going to create a new thing, you're like, well, you know, is it real time? Is it intelligent? Is it contextual? Actually, how do we bring that humanity back into that experience? The things that have been left behind when actually we digitize these things. How do you make it extendable in terms of the ability to actually start integrating these things into new places? And then how do you make that thing social? If you use that as a yardstick of actually assessing all of the things that you do, because actually at the moment those things don't happen. You know, how can you use data? How can you use the real-time nature of the services that you've got? How can you use geolocation capability that actually is being built into everything to actually allow you to create contextual services or products for people that actually you just wouldn't have been able to do 5, 10 years? Fundamentally, how does that allow you to change the business model in terms of actually how you start providing these things? So for me, the way we sort of think about this is kind of like this dude. Which is fun, actually. I just like Googled Swiss banker, and this guy came up. It turns out he really is a Swiss banker. It wasn't just like a nice picture type thing. I can't remember what company he works for, but at some point I'm going to give this presentation. That guy's going to be in the room, and it's going to be like the best thing ever. It really is. But for me, like, he is real time. Okay, he looks intelligent. He's got a lovely tie. You know, he's very sort of contextual because he's actually looking at the things that I'm doing, the funds that I have, the setup, my aspirations, my understanding. He is human, wonderful, or at least Swiss. So, you know, the ability now, and actually if you look at what we can do, you look at the data that probably all of you guys possess, you look at the technology that's out there, everything that this guy can do for me, if he was managing all of my banking, managing all my financial life. Well, actually, the private banker in your pocket is really what fintech is trying to do. You know, when we were creating Metal, really what we were trying to do is not create a better banking system, not creating a better commercial bank for people to do, but fundamentally, how do you carry a CFO around in your pocket all the time? Because actually the things that I worry about when I'm running a business aren't, well, what's my balance? It's actually what's my cash flow in 4 weeks. It's the 4 or 5 things that actually keep you up at night when you're running a business that actually traditional banking just doesn't give you. Now, how different would that be? Like, how different would it be if actually the thing that's in your pocket when you've got a retail bank or a private bank or a commercial bank is actually the thing that's there to change the way that you make decisions about the things that you're doing? Now, that for me is a service that's there, but this is just not how big organizations sort of think about these things. When you start looking at product, you know, new product, new capability, I'm going to build a new thing, I'm going to build a new current account, right? Actually, people sort of look at this stuff. It's like, okay, it's going to be a balance, and we're going to have a card and a statement, and you need to make payments and receive these things. Now, customers don't think like that. They have no desire to like be, you know, I'm like, I need some more sort of payments and receiving in my life. You know, it's like, it's not the thing that I wake up and ask. The thing that they get up to do is, well, what are the jobs fundamentally that actually need to be achieved? And the difficulty, you know, you remember the slide way back, this is the gap. You know, people are wanting to do this stuff, and actually what banks are giving them is this. And that's an issue. You know, we've got to figure out how we sort of bridge that gap, because if we don't bridge that gap, other organizations find this as opportunities to create new, more interesting business models that actually are fundamentally in a different place. You know, if you're meeting these things and not just providing these things, this is a product, this is a service. This is you being on my side as the customer and actually providing me a capability that helps me. This is you creating a business model for yourself or sustaining a business model that's existed for 300 years, right? So the last one, I think this one's fun. I found the other ones fun. I hope you did, but I found this one really fun. Like, the issue really is that innovation right now is fundamentally not helping. What it's doing is it's just adding layers of cost to the back office right now. And that is a really hard thing. You know, if you go and talk to any CEO at any bank, this is the kind of scenario. You end up with an investment. It's like, great, we're going to put our 1 billion. We like call the FT. We're spending our billion. Okay, guys. Like, I know we spent the billion last year. I know we spent the billion last year. But this time, it's going to be different. So you spend your billion. 900 million of that probably goes on running the bank. The rest of it at the top of this is the sort of innovation stuff. Now, in some organizations, it's the innovation stuff that just kind of makes the board feel tingly. And the problem with that is that when you go to the next year, actually what happens is you just layer on some more cost in your back office, right? And it's not just about making your operation more expensive, it's actually moving you further away from being able to fix that problem. And then it goes on, and then it goes on, and then it goes on a bit further. And like before you know it, actually that 100 million you're still spending on innovation is just putting stuff into your back office. Now this, I think, is probably the most fundamental problem that most of the really big banks are kind of facing into. It's like, actually, how does the stuff that I do up here actually change this so dramatically? You know, how do I take 40 or 50% of my back office cost out of the thing that I'm actually running? Because we're in a situation now where fintech players are coming in and running purely like a current account, running a current account for like 12 or 13 pounds. You go to a major high street bank, it's 240. That's kind of terrifying, isn't it? So how do really big organizations do enough rationalization and simplification of the back office with the spend that they're doing on innovation without causing the problem to be harder? Because fundamentally, all of these things it is the weight that people carry forwards with them when they're trying to change their organizations. So all of these different things lead to a really interesting sort of new dynamic. There's a new sort of climate in the world which leads to an interesting sort of new problem. And actually, like the traditional way of sort of measuring the success of organizations has kind of started to be eroded a little bit, and actually that fundamentally the world is sort of changing. So in the good old days of banking, where nobody was really sort of doing too much from a change perspective, either from the business model or fundamentally how those services are being created to customers, there was a single axis. You know, the axis on the sort of left here very much was the sign of success, which was number of customers, and that was fine. But fundamentally what's happened over the last couple of years is this new axis has really sort of changed the game. So the intelligent digital services that are being delivered to customers is kind of changing the game in terms of where you're going. Now, we're still in a situation today where the big incumbent organizations have most of the customers. Like, this is not a, fintech has taken all the customers and you don't know, you're crazy type statement. I mean, I can do that for you later on. I've still got a little bit of time, so I can come to that at the end if you really want me to. But the big organizations still have most of the customer base, and that's great. But they have very low sophistication when it comes to digital services. Now, below them, we have a number of brand challenges in this space. And depending on where you are in the world, these could be community banks. These could be, in the UK, it could be a Tesco bank. It could be, in France, it could be an M&O integration. You know, various different players in various different places. The fun thing about these guys is many of them have spun out of these big organizations. And I kind of liken them very much to, you know, everybody I imagine in this room has had that moment where you had that conversation with your parents where you were like, I'll never grow into you, like it'll never happen type thing. You were probably like 12 or 13 at the time. And then when you hit 20 and you suddenly realize like you're just like your mum and dad, that's what's happened in most of these organizations. They've built banks in a very traditional way. There's similar products, similar capabilities, similar technologies actually being deployed. The challenge for these guys is really about moving up and to the right. Like, how do they acquire more customers? How do they increase the sophistication around their capability while they're doing it? Now, over here on the bottom side of this, you have a number of new digital startups. You know, these are the fintech players, both in the B2C and B2B sense. These are people who are trying to do different things in it. Now, some of these guys are kind of below the line on the number of customers one, which is cute, right? You know, they're lots of very good marketing, but reasonably low on the impact scale. Whereas some of them are actually really, really starting to sort of rocket here. You know, we're seeing people like Revolut and Monzo acquiring customers in sort of record-breaking speed, really. You know, if you look at somebody like Monzo as a really good example, the customer base that First Direct acquired in 30 years, Monzo have done in 3. Now, that's pretty impressive, right, in terms of the speed of change, the speed of disruption in this market in terms of where we're going. We generally sort of classify these guys by the sort of line that is where the traditional sort of core banking simplification is. So on one side of this, you've got people who are trying to scale up it. On the other side, you've got people on this line who are really trying to get to the right-hand side of it. The last piece there is about non-FS digital players. And this is a good week to talk about those given everything that's happened with Apple Card. But globally, if you look at the Ant Financials, you look at Tencent, you look at Googles and Facebooks and everybody in the mix. Now, these guys are not on the banking battlefield. They're using Goldman Sachs to get onto the banking battlefield. But they're having the amazing amount of impact in terms of the distribution of services or the access to capability that actually just didn't exist before. Apple Pay is a really good example. 1% of their total revenue of Apple is Apple Pay, but now they're doing more transactions than PayPal. So yes, it's small for them, but it's kind of huge from an industry perspective. So the interesting thing that we sort of get to, usually when we sort of go through this, you get to a point in this where, and we've got the sort of fun of working with sort of various different people in various different places of this. But actually when you go to sort of incumbent organizations, like my sort of best point at this is, well, how do you get across the page? What is it that actually we have the money, we have the customers, how do we move through these problems? How do we move across this page to actually fix this problem? And my sort of answer to that actually is sort of, you can't, and it's actually too hard. Which is like an awkward place to leave the presentation. I mean, like, you just clap when I go, I guess, I don't know. But genuinely, like, it's really hard. And I don't mean that, I'm being facetious. Like, you've probably picked up on the facetiousness all the way through it. This wasn't a surprise to you, was it? But the idea, and I sort of, I think if you haven't heard this story before, so I live in a tiny little place called Norwich on the coast. Grew up in a tiny little village called Bacton, had like 4 people in it. That was great. We got a bus like once a week. It was amazing. Like the idea, there's a sort of story about in Norwich and Norfolk that if you sort of pull up there's like tiny little villages, you pull up in Bacton and go, hey, I'm in Bacton, how do I get to North Walsham? The lovely guy with the bike that he's pushing will be like, well, if you want to get to North Walsham, I wouldn't start from here. And you're like, well, that's really unhelpful. Thank you, I guess. And then you drive on. But that's kind of what I mean with this. Really, I think the problem that actually major organizations have got is that they're dealing with the problem of digital in the same way as every other problem has ever been dealt with. So to your point earlier on, actually, technologists are dealing with it with like a technology problem. And actually the regulatory people are dealing with like a regs problem. The amount of organizations I go into where open banking is being treated as a pure threat to the pure fabric, like it's some sort of religious sort of problem that's been descended upon them on in terms of what they're doing, rather than an opportunity to fundamentally restructure and open up new business models. And this is the challenge. So for me, I'm like, well, actually, I think it's almost impossible to move an entire 150, 250,000 person organization that has multi-geography, blah, 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 big, to this point over here. And like I've tried this a few times before. I've tried to figure out, is it quicker to start something here to get up here, or to start something here and move across? And actually the thing that I sort of come back to is, I think it's quicker to start something from fresh. Because actually the things that are the inhibitors in here aren't, and if you go back to my list of excuses that were there, most of those excuses are not real. People talk about legacy technology as the major inhibitor for them not being able to do something. That's bullshit. I've done well to not swear here, I'm sorry. Like, it was the first time, I've only got 10 minutes left. So, but that's not true. So legacy technology is not the inhibitor in organizations. Neither is it regulation. Actually the regulator are very happy for you to provide better customer experiences to end users. Like, that's what they want you to do. Like, so what is it? Guesses, answers on a postcode?
Culture.
Yes, absolutely. Every time it's culture. It is not about whether you've got the right idea. It's not about whether you're in a situation where you've got the right people. Again, I found the right people in every organization. There's little pools of them in places. Group them together, give them a mandate to go do something and a small amount of money. You can find that they will do amazing things. And this is really, again, just what fintech is doing. So why is it? Why do you think that people can kind of get from here and acquire 2 million customers quicker than HSBC pumping loads of money into First Direct can acquire 2 million customers as well. So is it like a hard thing? Is this difficult? Is this awkward? I mean, like, somebody come up with a good excuse. Like, this is not your report. Like, I know it's annual review time, and I'm not your manager here. Like, you can just tell me to go away. It's fine. But like, this stuff is not hard. Like, the recipe for this stuff is actually relatively simple, right? The fintech players, nobody out there is doing anything that actually I don't believe you would go, well, I never thought about that. That's too hard, right? And the recipe for it, when you look at it, actually is very, very, very simple. Like, use truly digital capabilities, right? Check. Digital riches. Use it. I give it to you. It's free. Deliver valuable services to customers. Now, this seems like an obvious thing when I say it out loud, doesn't it? Which is like, you know, do stuff that people want. Again, obvious when I say it out loud. Who are underserved or overcharged, which is everybody, so I'm going to give you that. There's lots of people out there who are definitely underserved as pockets of nations who are overcharged. Well, this is about fundamental reform of actually how those business models work, which I know is really difficult to let go of because the way that you make money is a really hard drug to get off, right? That's a difficult thing to kind of give away. With a team of people who are motivated. Now, this is a fun one because when people talk about cultural transformation in an organization, it's like beanbags and Post-it notes, right? And actually, like, the hard thing that you're trying to sort of get across there is don't try and copy the traits of things that you see being as a sign of success. Like, what did those organizations do to get to that point? Because, like, I don't have an innovation lab. Like, I don't think we need that. We need people who deliver stuff. You know, the idea actually that you can create a small group of talented people with a mandate, like, there's definitely everybody in that organization is there. And do it in a way that allows you to move fast. Now, this one's an interesting one. Sure.
You've got 5 points up there about the recipe for fintech success. If you were to turn all of those into reverse, you've got a description for how to run an incumbent bank.
There you go. Sure. You can change the title really easily, can't you? And it would have a very different meaning.
Yeah.
This is how to fix those things in terms of what you're doing, right?
But that points to blank sheet. I can't go into
My organization.
I cannot go into any of these organizations and give a mandate for that. Actually, if you're a CIO or a CEO and you give a mandate for that, you're driving the wrong behaviors anyway, because somebody's not doing it because they've been told to rather than because they want it.
So this is actually what most big organizations are actually doing now. And, you know, if you look at what you know, Marcus with Goldman Sachs is doing, they gave a 30-person organization, you know, a huge organization gave 30 people a mandate to go and build a new thing.
And Barclays hired Megan Kaywood for
She did, yeah. She's doing a cracking job over in New York. This is what Alison Rose did with us with Metal. You know, this is happening, and actually it's playing to that major point. The inhibitor isn't having, you know, not having enough customers if you're a big organization. Your inhibitor isn't having the wrong ideas or the wrong people. It's actually just like saying obvious things to people and letting them go away. And actually, it's an exercise in removing things rather than adding things. So actually, how do you remove some of the governance? How do you remove some of the inhibitors? And don't get me wrong, like, you still have to do some crazy stuff. You know, some of the stuff that actually we went through in terms of, you know, building Metal in NatWest, we adhered to every single piece of governance and structure and regulation within that organization. But we went into the meeting with an ability to ask why. And actually what happens in organizations when you start asking why is it spreads. And actually you find other people who are asking why. And this is the thing is, when you write this down, like, this is all Anne Bowden, Tom Blomfield, Nikolai, like, all this is what these guys are doing. Give people a mandate, give them motivation, allow them to have the expertise that you need to move these things forwards. And like you say, at the end of this, actually, you know, the recipe to transform banking or transform an incumbent bank, that would be where you would get to. So for me, the interesting thing on this, and is there any other questions at that point? Cool. Is really, this is why we say this. So when we get to that point where we say digital banking is 1% finished, it kind of sounds like a, an indictment of like, come on guys, like, God, like, pull your socks up, what are you doing? But really fundamentally for us, what we believe is that there's a 99% of this journey still to go. With all of the regulatory change, with all of the opportunity with big organizations, with everything that's actually happening, all of the new technology that's coming through, all of the opportunities that you have within your organizations, you have all of this stuff still to go. It's whether you choose to do something about it. Because the way in which you've been successful in the past is not going to be the way in which you're successful in the future. And that's the major thing to kind of get through. So for me, it's like, actually a sign of positivity. Here is to the 99% in terms of the stuff that we're doing. Because fundamentally, it's time to kind of get through this stuff and actually push, get these innovations through. Do you guys agree? Yeah? Okay, well, I've got 5 minutes left, so that was 40 minutes. You guys weren't listening to me, were you? That was the point. It isn't this point. It isn't about innovation. Like fundamentally, I'm glad I've got 5 minutes left to really rant at you guys for another 5 minutes, because if you didn't learn anything through this, like innovation is not the answer for what you're doing. Anything you possibly could want to do in the industry, somebody else has probably done. There is somebody out there who can help you with it. You've got the ideas. You've probably got like at least 10 of them in your head in terms of what you want to do now. One of them is for me to be quiet, I'm sure. But being in a situation where you know these things, like innovation is not the thing.
Innovation is not invention.
Innovation is not invention, no.
Innovation can be the cardboard circle that goes around your coffee cup. The guy who invented that made tens of millions of dollars.
Absolutely.
Innovation is the applicable use of technology to drive service and behaviours. And that's absolutely banks need.
I mean, man, you said applicable use of something. I just said it's time to get shit done. Like, for me, being in a situation...
I didn't want to say it in Glaswegian terms.
Maybe that's where I'm from. I just don't know. I need to have a conversation with my mum. So for me, fundamentally right now, the opportunity in an organization is actually allowing things to happen. How do you unlock the potential? How do you go to an organization and go, look, actually, man, this stuff is not hard. Like, you're making this hard. How do we get this stuff through? So actually, for us, you know what the thing is to do. For now, it's really just about getting shit done. And that's me. Thank you very much. Thank you.
Fabulous, fabulous stuff. Cool. So I think I was going to say, is there any more questions for David? But I think we had a few hecklers, we had a few comments, so I think...
Don't throw anything.
Don't throw anything. So any final sort of comments or questions for David before we move on to Rob?
Yeah, there's one.
Why did you get to digital banking? There's only 1% done and not just banking. Because there's a lot of people in the room that work in IT that will have seen stuff from the business come over a fence,
yeah.
And all of a sudden it's IT's problem and you guys are the bad guys. And all the time digital's up.
I'm the bad guy. Or IT's the bad guy.
IT is the bad guy.
I was going to say, that took a turn, didn't it?
You should see the size of him as well, I tell you. You ain't going to win.
Yeah.
Right, so you've been on my list since like the second you came in. But okay. all the time it's digital banking.
Sure.
There's an excuse, there's a reason to put it on IT's doorstep when it's not these guys' fault.
Yeah, no, so for me, all banking is digital banking. Give me an example where actually, so it doesn't really matter what the interface is. I don't mind if the interface is a mobile phone or my watch or like a human. The way in which actually wealth management should be being powered up is through digital capability. In some instances, it's about the delivery of that to a human kind of distribution capability. But in most instances, it's going to be, Alexa or, an app or the internet or something. So yeah, for me right now, digital is still a thing. But it's a very similar point. Like, in 2 or 3 years' time, I'm hoping we don't have to have like digital strategies. It's just strategy at that point. So yeah, I think the whole organization is fundamentally transformed by those things, and fundamentally, actually, it changes how the creation, how those transformations actually work. Because many of the problems that big organizations have is those transformations are done in those silos. So meaning, well, data's fully available through one of these channels, but not through another one, and that's again not kind of how consumers actually interact with organizations. So for me, it's all digital.
One of the big concerns that I see anyway is that every bank around the world just now has the same strategy.
Yeah.
Improve customer service, be the best at customer service for a bank, which is piss poor.
I broke the seal with you, didn't I, Hank?
Yeah. Be operationally more effective and more efficient.
Yeah.
cost less,
Yeah.
and try and return more shareholder value.
Sure.
Every bank in the world, that's their strategy, which is actually the annual goals for the chief operating officer.
Sure. Okay. Why do you think everybody's got the same strategy?
Because everyone looks at everybody else in the industry, and nobody looks ahead to what banks need to be like in
There we
2025.
go. I mean, like, if just because, you know, like, going back to like childhood again, it's like, look, if your friend jumped off a cliff, would you do it as well? You know, that type of vibe. Just because one person bought like a strategy that said they should do a thing that moved them in that direction, you know, I think everybody's big enough and grown up enough to try and make up their own minds on these things. So,
Not close enough.
well, in some industries it definitely is. And I think this is the interesting thing, is like retail banking, people are kind of hanging on that cliff right now. You know, SME banking, people are kind of hanging on that cliff right now. You know, the credit card industry took such an interesting sort of turn with actually everything that's happened with Apple Card. Wealth management is definitely the next industry to sort of get a real interesting sort of push. You know, the things that happened with BlackRock and HSBC this week. I feel like the disruption in bigger and more scary and more, or fundamentally revenue impacting parts of the business is getting more and more serious. Can I have one more question?
You can have one more question. Yeah. Why not?
I'm curious, what does the 99% look like or might look like?
That's really interesting. So I think the challenge on that is that actually when you start looking at what digital services aren't really confined by products. Which is really, really difficult if you're the regulator, because actually the regulator regulates on, you know, individual products in terms of what you're doing. But actually, so everything drives back to a credit card or a current account. It's like a pinball machine that always leads to a product. Like, you know, that's unhelpful. But actually, for me, the services that are built up on top of this are as much about the nudges and the advice that actually needs to be there. So actually, for me, the revenue model is the place that I always start with how this disruption actually happens. Because if you guys kind of flip, and the thing that I found really interesting about the Apple Card stuff was actually they're trying to start with something that hasn't been done before in credit cards, which is debt management initially. You know, how do we incentivize you to use this by giving you cash back, but then how do we manage debt management to not be dicks, really, you know? So they're kind of trying to help with a service, but fundamentally it's still the same product. So for me, it's an interesting one. The higher up you get, the more I feel like banking becomes a subscription model capability that actually allows you to manage all of your finances without having to do something. You know, the autopilot for being able to move when your savings account runs out, the autopilot for switching different various utilities or services kind of around your household. You know, these are the things that actually I would value as an individual, that I would pay for, and actually flips the relationship that big organizations actually have with their customers from one of kind of laying like, you know, bear traps on the floor and hoping you fall into an overdraft, or being in a situation where fundamentally I'm giving you something that makes your life better.
Cool. David, thank you very much.
Cool. Thank you very much.
Good stuff.